Thinking about refinancing your home in Texas, before you do, there's something you need to know. Texas has some of the strictest home equity laws in the country. That means the rules here are very different from other states, especially if you're planning to tap into your home's equity. If you don't know the laws, you could waste time applying for a loan you can't actually get, or worse, get stuck in a financial situation you didn't expect. But don't worry, I'm going to break it all down for you in a way that's easy to understand so that you know exactly what to expect when refinancing in Texas. Let's get into it. Unlike most states, Texas has special laws that limit how much equity you can take out of your primary residence. These laws are designed to protect homeowners from overborrowing and getting into financial trouble. Here's what makes refinancing in Texas unique. These rules only apply to your primary residence. So if refinancing a second home or an investment property, these restrictions do not apply. If you're just lowering your rate without pulling any cash out, many of these rules won't even affect you. But if you want to take cash out of your home's equity, there are strict limits to how much you can borrow and how the loan must be structured. So whether you're refinancing to get a better rate or pull out some equity, let's talk about what these Texas laws actually mean to you. If you're looking to tap into your home's equity, also known as a cash out refinance, Texas has some very specific rules. For starters, you can only borrow up to 80% of your home's value. This is the most important rule to remember because in Texas, the total amount of your loans cannot exceed 80% of your home's value. So, for example, if your home is worth $400,000, the maximum amount of loans that you can get on that property is $320,000, even if you have more equity available. This means if you already owe $300,000, you could only pull out $20,000 in cash. So if you're hoping to cash out more than that, Texas laws won't allow it. All existing liens must be paid off as well. So if you have multiple loans on your home, like a home equity line of credit or a second mortgage, you must pay them off with your refinance because you cannot refinance your first mortgage and leave the HELOC open if you're trying to take cash out of the first. Texas only allows one equity loan at a time, so it'll have to be combined into a new loan. This rule protects homeowners from having too many liens on their property at once. There's also a waiting period between loans. So if you've already done a cash out refinance, Texas law states that you must wait 12 months before you can refinance again. Even if interest rates cooperate before then, you're not able to refinance until that 12 months has passed. So if you just pulled equity out recently and were thinking about doing it again, you'll have to wait. Now, if you're just looking to refinance for better interest rate or shorter loan term without taking any cash out, good news. A rate and term refinance is much simpler because most of the Texas cash out laws won't apply. So with this type of refinance, you can lower your interest rate to save on monthly payments, switch from an adjustable rate mortgage to a fixed rate mortgage, shorten your loan term from a 30-year fix to say maybe a 15-year fix to pay it off faster. But there's a lot of misinformation out here about refinancing in Texas. So let's clear up some of the biggest myths. Myth number one, you cannot refinance if you've done a cash out loan before. The truth is you can absolutely refinance, but if you previously did a cash out refi, your loan will always be considered a cash out refinance going forward if you're going to do another cash out. So if you do an equity loan in the beginning, wait the 12-month waiting period, and then do a rate and term refinance, you would be able to reclassify that new loan as a rate and term and not a cash out. It's a little bit tricky. Those laws have changed over time. So just make sure that you're up to date with the most current information. Myth number two, you can borrow as much as you want if you have enough equity. Truth is, nope. Texas law limits you to 80% of your home's value with no exceptions whatsoever. Myth number three, you can keep your HELOC open while refinancing your primary mortgage and taking cash out. That is not true. All home loans and liens must be paid off with the refinance if you're doing a cash out refinance because you are not allowed to have two equity loans open at the same time in Texas. So if you're thinking about refinancing in Texas, here's what you should do next. Decide what you need from your refinance. So are you looking for a lower rate? Do you want to tap into your equity? What's your goal? Because that's going to determine what type of refinance is best for you. Number two is check your home's value. Since Texas limits cash out loans to 80% of your home's value, knowing what your home is worth will tell you how much equity you can actually access. And number three is talk to a mortgage professional. Texas refinancing laws are very tricky and the most unique in the entire country. So working with someone who understands them is key. A good lender will walk you through your options and help you structure your loan to meet your needs. So if you're considering refinancing your home in Texas, don't go in blind. The laws here are different, and making the wrong move could cost you time and money. Let's make sure you get it right. Okay. So book a call with me today. I'll help you figure out the best refinancing strategy for your situation, whether you're lowering your rate or pulling out cash. If you found this helpful, hit that subscribe button for more mortgage tips and home financing strategies. Click the link below, schedule a chat, and let's get started.